Are you or someone you know looking to buy or sell a home? When you use a HomeGain Realtor to buy or sell a home, you can get $150. Visit HomeGain.com and click on the Promo 150 banner at the top of the page to get started. Compare HomeGain Realtors and choose your favorite. Complete your home purchase or sale transaction with a HomeGain Realtor, and HomeGain will pay you $150. Get started today by going to HomeGain.com. Welcome back, Real Estate 360 Live. I'm your host, Ryan Sloper, joined by my guest, Louis Cammarosano, the general manager of HomeGain. Quick reminder, Real Estate 360 is designed to build the Washington, D.C. Metro's housing and credit markets one house at a time. If you ever have any questions, concerns, or real estate needs, the best number to reach out to us is 877-245-2030. That's 877-245-2030. Whether you're trying to get your credit fixed so that you can buy your first home, whether you're trying to refinance to the lowest rates in U.S. history, whether you're trying to, whether you're buying your first home or you're trying to figure out a situation to get out of an existing home that you have now that you're unable to keep up with the mortgage payments, they're just too much, and you're heading down the path towards foreclosure, there are other options out there. And, it's my job to present those options to you and let you know that they are available. I know a lot of people have been trying to get loan modifications and not having much success. While that is, it can be very disappointing, the bottom line is the worst thing that you can let yourself do is to file foreclosure or let it go into foreclosure, rather, because that is going to affect your credit long term versus maybe doing a short sale, which you can actually – there have been many cases of actually doing a short sale without ever being late on your mortgage. Now, a lot of people probably think that, I heard you have to miss payments before the bank will accept that. That's not necessarily true. There's a list of a ton of different hardships. We've talked about it numerous times on this show, that there's a lot of hardships out there for people, whether you've lost your job or whether it's just, you've had a cut in pay that would allow you to qualify for a short sale. And banks, more times than not, are they've gotten a little bit smarter over the past, I would say, year, especially with all the major lawsuits that are in place now, where they're just, they don't want to go through the foreclosure process because there's too many things that might pop up that might pose a problem down the road that they might be paying a penalty for. So the short sale is an easier route because it's, basically the owner of the house is willing to allow the short sale to go through. So it's good for them because they don't have their house going to foreclosure, and it's good for the bank because they can accept less of a loss than letting that house go into foreclosure, where they might pay an extra $50,000, $60,000. So bottom line is, if you're having any stressful situations and you just need somebody to talk to, somebody to point you in the right direction, I'm glad to help you out with that. It's 877-245-2030. That's 877-245-2030. So now it's time to jump into this week's market movers, which is basically letting you guys know what's on deck this week that can affect interest rates one way or the other. For many of you that might be in transactions right now and you're just trying to figure out maybe, what would be the smart time to lock in your rate. This segment was brought to you by HomeGain. HomeGain is the place to get you started buying or selling a home, finding a realtor, and getting real estate questions answered. Go to HomeGain.com today to see what I'm talking about. All you have to do is type in your home address, and you'll get an instant free estimate of your home's value online. It's a great way to monitor your home's value, and it's totally free. And you can also go there to compare real estate agents. So if you, no matter where you are in the United States, you can go and compare different real estate agents against each other anonymously until you can basically review their profile and figure out who might be a good fit for you, and then choose them to have you contact them at that point. So it's homegain.com. So this week, there's a lot of reports that are out there, a bunch of key data points that are going to be on Tuesday, Wednesday, and Thursday. April reports, for the most part, the retail sales, the consumer price index, housing starts and permits, industrial production and factory use, as well as the Philly Fed May index, and more importantly, the minutes from the April 25th Fed Reserve meeting will get a lot of focus. There's going to be looking for a lot of clues about another possible quantitative easing, which basically, in essence, Lewis, is the printing of more money, I believe.
Right.
So there's many believe that they're not going to have another round of money printing. However, there's many analysts and economists out there that think that the Fed is going to probably ease one more time before the elections, and they almost have to do it at the next meeting because the meeting after that is going to be right before the November elections, and they're not going to want to do anything that's going to maybe bring a negative light to the president. interesting. I'm not really sure. I'm pretty torn. I don't think that they're going to do anything. However, with this whole J.P. Morgan issue, I don't know. There might need to be some backstopping there. What are your thoughts on that, Lewis?
My view was, absent anything out of the ordinary, that they wouldn't do anything until after the election, but that they're inevitably going to need to do more money printing because that's their policy. One has to speculate whether this whole J.P. Morgan thing is just a straw man to go ahead and create another crisis so that they can inject more liquidity to further keep the interest rates low. I think if there is some contagion to the J.P. Morgan or from issues in Europe and stock prices were to plummet or there was some type of panic, so to speak, they would love to ride to the rescue with a prepackaged QE plan.
Yeah.
But absent anything out of the ordinary, in other words, if J.P. Morgan is contained and they manage to kick the can down the road further with Greece and there's no crisis, then I don't think they will do any quantitative easing until after the election. But as we mentioned, they have to do it in order to keep the game going, in order to keep kicking the can down the road and keeping interest rates low. They have to engage in another round of it. It's just a question of when will they do it.
Right. And then the Wednesday report will give us more detail on the members' talks during the meeting, including their outlook on the U.S. economy. Obviously, the last time around in the March meeting, members made another round of quantitative easing sound less likely, with only a couple of people saying that it could happen if the economy lost some momentum. So,
Excuse me, if you remember Bernanke's remarks, there wasn't any plans, but that they stood ready, so on, with all the normal language, with the tools to do so. So if there is a problem in the markets, you can bet that they'll come forth with the QE.
Yeah, and it's going to be interesting to see what happens. Like I said, I sure hope that it doesn't happen. But once again, in order to keep this going, they're going to most likely have to at some point. I think that that might bring more of a negative publicity, going into the elections if it's done at any point between now and November. But remember, guys,
it will highlight the recovery is not happening.
Yes.
Therefore, stimulus is needed.
Yep, absolutely. And obviously, we've talked numerous times, Lewis, that some sort of artificial stimulus is not what is needed right now to fix the economy.
In our opinion, yes.
In our opinion, anyway, it's not going to fix the economy. It's going to continue this illusion that at some point it's going to get better. But
all Krugmans and the Keynesians would argue that we need more of it.
Yeah, more and more and more, and eventually it's going to get better. And as our deficit is just reaching new heights, I believe it's going to be probably sometime the end of this year, they're going to have to raise the debt ceiling again. So, I mean, what staggering number do we need to get to? 100 trillion before they decide that, hey, this isn't the road that we need to continue down?
Well, they won't decide anything. The market will decide for them at some point. If the Fed is 99% of the purchaser of Treasury securities, then if the game is up.
But why isn't? But if the market should be able to see if they're already buying 60+% of Treasuries that are issued out there, wouldn't
that gives them some comfort that their money is, in a perverse way, that their money is safe because the Fed will be there to print it. If you remember, Greenspan made that comment. He said the U.S. will never default. He made it after he was Fed chairman about 6 months ago. He said, because the U.S. can always print you the money.
Right.
Now, that may sound perverse, but if all other countries are on a fiat currency system, then at least you can stand behind the United States because it's the best one in the world, and it's the reserve currency. That's the only thing that gives people comfort. But if there were, as Ron Paul talks about, competing currencies within the United States or outside the United States, they're actually backed by something, you would see very quickly the value of the dollar go down. Right now, there just isn't that alternative currency, and we've spoken from time to time about using gold and silver, but the markets in those metals are so thinly traded that right now isn't viable unless a sovereign were to take up a gold-backed or commodity-backed or silver-backed standard for their currency.
Yeah, and it's really amazing to me in this period of time. I've been watching gold prices just come down and down and down and down, and I'm like, gold and silver has never looked stronger to me than any other time than right now.
Well, that's what happened. If you remember, in the middle of 2008, as the storm clouds were rising, you would have thought people would have moved into gold and silver. That's when those commodities took a big hit.
Yeah.
And they went down. they did not go back up until after the rounds of QE. People moved their money into Treasuries.
Yeah, absolutely.
And frankly, still, that's probably what's going to happen now if there's more problems in Europe, is happening, and there's more problems with J.P. Morgan. They will, and they are dumping right now. You can see gold and silver have gone down the last week or so.
Yep.
You would think that's counterintuitive that the flight to safety should be in gold or silver, but they're still considered by most people risk assets. And when people need to raise money, not everybody has large portfolios in gold and silver. They sell that to raise liquidity, and they put their money in what they think is safe, and they buy treasuries, short-term treasuries.
So basically, you're buying the Fed.
That's what's going to happen. That will happen. In the next crisis that we have, you'll see gold and silver go down, and they'll go back up once the Fed acts to correct or to fix the crisis, and print more money. Then the smart money will move back into gold and silver, and they'll head right back up again.
Yeah. Now, guys, if you're listening out there, when we were talking about the Fed and the moves that are taking place here and them buying 60-some% of all treasuries issued and mortgage-backed securities, this is all a good thing for you guys out there that are looking to purchase a home. Don't get me wrong. We talk about a lot of stuff that's going on in the economy and a lot of things that we don't necessarily feel are being dealt with properly. But for those of you out there that are actually looking for a home or trying to refinance an existing loan that you have at basically the all-time low rates that are out there right now, it's a phenomenal opportunity for you. With the manipulation that the Fed has on the markets right now, you're able to actually capitalize on that if you have a job, if you're able to qualify for a mortgage. It makes so much sense right now for the majority of people to do so, because you're able to, as Louis and I talk every week, you're able to basically secure your long-term cost of shelter at sub 4% interest rates, depending upon your qualifications. So, to know that you've basically at least secured your cost of shelter for you and your family for the next 30 plus years at these levels, to protect yourself from future inflation, or actually just the not knowing about what's going to take place over the next 1 to 2 to 5 to 10 years. You can keep one thing constant, and that's your actual cost of shelter, which is critically important. Everybody needs a place to live.
But the only downside to that is if you're not certain about your employment prospects or your ability to meet the mortgage, which is the same case with the rent. You do have to live somewhere.
Yep.
As long as you're not getting out over your skis on how much of a mortgage you take out, that mortgage is currently better than renting. You know that in a few years, that mortgage rate, the amount that you pay should be less than your rental. You're probably in good shape.
Absolutely. We're coming up on a break, guys. When we come back, the U.S. records the first monthly budget surplus. Is this a joke or is this for real when we come back?